Welcome to this deep dive where we try to make complex topics a bit clearer.
Perhaps so.
Today, we're zeroing in on the financial pulse of Nepal.
Right.
Specifically, we're looking at the commercial banks and their performance reports. These just came out, covering up to the third quarter of the current fiscal year. That ends around mid-April 2025.
Yeah. And look, when you hear financial reports, I know eyes can glaze over. It sounds dense.
Totally.
But think of this as your cheat sheet, maybe. We've waded through the numbers.
Done the hard work for you.
Exactly. We want to pull out the key bits, the surprising trends, give everyone a clear, quick understanding of what's actually happening in the banking sector over there.
Precisely. And our main source for this is a piece from Banking Khabar. It was published just yesterday, April 20th.
Fresh off the press.
It gives a really good summary of the third quarter status for, well, a whole bunch of commercial banks.
So our mission, if you will, is to get a handle on the overall health of this sector. It's pretty critical for Nepal's economy, right?
Absolutely vital.
We want to spot the trends, see who's doing well, who's maybe struggling, and understand the why behind it.
Okay. Sounds like a plan. Where should we start? Let's unpack this.
Well, let's start broad. The article suggests that generally quite a few banks have actually boosted their net profit compared to this time last year.
Okay, so that sounds positive on the surface.
It does, yeah.
Yeah.
But, like with most financial stories, there are layers. It's not quite that simple when you dig in.
Right, the devil's in the details. So who are the big winners in terms of profit growth?
Well, Global IME Bank definitely stands out. They posted a really significant jump. Get this, 37.12% increase in net profit.
Wow, over 37%. That's huge. What's the number?
It reached NPR 4.53 billion. And here's where it gets really interesting.
Okay.
Their net interest income, the bread and butter, profit from lending actually dipped slightly. Same for their total operating income.
Huh. So profits way up, but core income is down a bit. How does that work?
Exactly. It's a bit of a puzzle, isn't it? But their operating profit surged.
Okay. Operating profit up, net interest income down slightly. What does that usually point to?
It's fascinating. It suggests maybe tighter margins on loans or maybe less lending overall for that net interest income dip. But the big jump in operating profit, that could be maybe really successful cost cutting.
Yeah.
Or perhaps a big boost from fees and other services.
Or investment gains, maybe?
Could be investment gains, too, yeah. It suggests they might be, shifting their strategy on how they make money.
Interesting. And what about their EPS, earnings per share?
That also went up. It's at NPR 15.86 now.
Yeah.
Generally good sign for investors, that higher EPS.
Right. Okay, who's next? Nabil Bank, another big one.
Nabil Bank, yeah. They reported an 8.21% rise in net profit. Hit NPR 5.05 billion.
So solid growth, though not quite the jump Global IME saw.
Still decent, and the article mentions their distributable profit improved. That's key for shareholders looking for dividends.
Good point. Anything else on Nabil?
They also managed to cut down their bad loans, which is always good news, means better risk management probably.
Okay. Fewer bad loans, better distributable profit. Sounds positive. Any caveats?
Well, similar to Global IME, their net interest income also saw a slight decrease.
Another one? Seeing a pattern here, maybe?
Could be. Maybe something broader happening with interest rates or loan demand affecting that core income for several banks.
What about Nabil's other metrics, EPS, net worth?
Their EPS is strong, NPR 25.05, and their net worth per share is quite robust, NPR 226.36, suggests a pretty solid underlying value.
So that slight dip in net interest income for some of these big players, it might reflect wider economic stuff.
It certainly could. Changes in rates, overall loan demand. But for Nabil, the fact they improved distributable profit and cut bad loans, that points to good operational strength, good asset quality. Those are really positive signs.
Okay, moving on. Machhapuchchhre Bank, how did they do?
They had a strong quarter, too. A 28.89% increase in net profit. Came in at NPR 1.10 billion.
Nearly 29%. Nice. What drove that?
Interestingly, their net interest income actually grew.
Okay, so not everyone saw a dip there.
Right, and alongside that, they had a decrease in their impairment charges.
Impairment charges, that's the money set aside for potential bad loans.
Exactly. So lower charges suggest they're feeling more confident about their loan book, anticipating fewer defaults. A healthy sign.
Got it. Their EPS and net worth.
EPS at NPR 12.65, net worth per share NPR 156.20. Seems like a more, straightforwardly positive performance from their core business.
Makes sense. Growing core income, less worry about bad loans.
Precisely. It paints a picture of a bank doing well in its main job, lending and managing the risks effectively.
Okay, Everest Bank is next on the list of gainers.
And they were impressive, a 32.55% surge in net profit. That's NPR 3.45 billion.
Another big jump. What was behind that one?
Looks like it was driven by increased operating profit and overall income. Plus, like Machhapuchchhre, they significantly cut their impairment charges.
Lower impairments again seems like a key factor for some of these gainers.
Definitely. And their distributable profit also saw a major rise. EPS is up to a solid NPR 35.61.
And any mention of their bad loans?
Yes, and get this, their bad loan ratio is remarkably low, just 0.64%.
Wow, 0.64. That's really good. Shows a high-quality loan portfolio.
Extremely strong. Everest Bank's performance looks particularly robust all around. High income, much lower impairment, super low bad loans, very efficient, very healthy.
Okay. What about Laxmi Sunrise Bank?
Their increase was more modest, just 2.24% in net profit, hitting NPR 1.65 billion.
So basically flat.
Pretty much. And interestingly, this was despite a decrease in their net interest income.
Ah, back to that trend again. Net interest income down, but profit kind of held steady.
Yeah. Their EPS is NPR 9.05, net worth per share NPR 176.16. It seems like they managed to find profit somewhere else to offset the dip in core interest earnings.
Makes you wonder where, doesn't it? Maybe fees, like you said before, or other non-interest income?
That's a crucial question. When net interest income falls, but profit stays okay, it often points to more reliance on those other streams. Could be a strategic move to diversify revenue, especially if lending conditions are tough.
Okay, NMB Bank. How did they fare?
They saw a nearly 6% rise in net profit, reached NPR 2.37 billion.
What drove their growth?
Increased net interest income and operating profit. So their core business seems to be doing better. Plus, a positive shift in distributable profit.
Sounds good so far. EPS.
EPS is up to NPR 17.23, but there's a potential yellow flag here.
Oh, what's that?
Their bad loans have increased. They're up to 4.47%.
Okay, so profit up, but risk potentially increasing too.
It highlights that balancing act, doesn't it? Growth is good, but rising bad loans can be a drag later on. They'll need to watch that closely. Could be an early sign of borrowers struggling more broadly.
Right. Next up, Nepal Investment Mega Bank.
But they had a significant jump too. 38.61% increase in net profit, reaching NPR 4.54 billion.
Wow, another big one.
Yeah.
Over 38%.
Yep. But, similar story. Again, this was despite a decrease in their net interest income.
Okay. Seems like a recurring theme for some of the big profit gainers. Operating profit was up, though.
Operating profit did increase, yes. However, two concerning points. They have a negative distributable profit.
Negative. So they can't pay dividends from this period's profit.
Correct. Suggests the quality of those earnings might be an issue. And second, their bad loans have risen quite a bit to 6.06%.
Over 6% bad loans and negative distributable profit. That does seem like a very mixed picture. Big headline profit number, but maybe some underlying weaknesses.
Absolutely. The profit jump is eye-catching, but those other factors raise questions about sustainability and asset quality down the road.
Okay, one more in the gainers category. Prabhu Bank.
There's a slight increase, just 3.5% in net profit to NPR 1.87 billion. EPS edged up a bit to NPR 10.63.
So barely moving the needle. What were the underlying trends?
They actually saw declines in both net interest income and operating profit.
Both down. How did profit go up at all then?
Good question. It seems they just managed to eke out that tiny increase, maybe through really tight expense control, or perhaps some one-off gains not related to core operations.
A marginal gain despite headwinds in the main business lines. Definitely something to keep an eye on in future reports.
For sure. The downward trend in their primary income streams isn't ideal.
Okay, so that covers the banks that saw profit increases, ranging from tiny bumps to massive jumps, often with some interesting caveats.
Right. Now let's flip the coin.
Let's look at the other side, the banks where net profit went down. And some of these declines look pretty steep.
Yeah, the magnitude is quite significant in several cases. Suggests some real pressure points in the sector.
Where do we start with the declines? NAC Asia Bank.
Yes, and this one is dramatic, a 91.81% drop in net profit.
91%, wow. Down to what level?
Just NPR 156.7 million, tiny compared to before.
What caused such a sharp fall?
Driven by decreases in both net interest income and operating profit. Basically, their core business took a massive hit.
And distributable profit.
Negative. And their EPS is way down, just to NPR 1.41.
What about bad loans? Are they sky high?
Interestingly, no. Their bad loan ratio is relatively contained at 1.92%.
So the problem isn't necessarily bad loans exploding, but rather a fundamental drop in their core earnings power.
That seems to be the story here, yes. A weakening in their fundamental business performance. The negative distributable profit just underscores how severe the downturn is for them right now.
Okay. How about Rastriya Banijya Bank? That's a major state-owned bank, right?
It is. And they also had a tough quarter, a significant 49.29% decrease in net profit, down to NPR 1.20 billion.
Almost halved. Similar reasons.
Pretty similar, yeah. Declines in net interest income and operating profit also led to negative distributable profit, and their bad loan ratio increased to 4.69%.
Nearly 5% bad loans now, and profit cut in half. That's concerning for such a large institution.
It definitely warrants attention. Could signal issues with their loan portfolio quality and maybe wider operational challenges.
Right. Siddhartha Bank, how did they do?
Their overall net profit decrease was minor, actually. But the report highlights a drop in their operating profit and, importantly, a significant increase in impairment charges.
Ah, the impairment charges again. So even if core income held up somewhat.
Exactly. They did see some growth in net interest and total operating income, but those higher provisions for bad loans really ate into the profit.
What are their numbers? EPS, bad loans.
EPS is NPR 15.89. Their non-performing loan ratio, bad loans, basically is at 4.04%.
So the headline profit didn't collapse, but rising impairment charges suggest trouble brewing beneath the surface, like worries about future loan losses.
That's a perfect way to put it. Siddhartha's case really shows how rising impairments can erode profitability, even if revenue looks okay. It signals growing concern about loan repayments.
Okay. Standard Chartered Bank, often seen as quite stable.
They saw an 11.17% fall in net profit, down to NPR 2.17 billion.
About an 11% drop. Reasons.
Decreases in both net interest income and operating profit again. Also a drop in distributable profit and EPS, which is now NPR 28.86.
But what about their bad loans? Did they go up?
Interestingly, no. Their bad loans actually decreased to 1.44%.
Huh. So they improved loan quality, but profits still fell. That's a bit of a head-scratcher.
It is an odd dynamic, isn't it? For Stanchart, it seems the lower core income net interest in operating was the main driver of the profit drop, even though their asset quality looks better. Maybe lower lending volumes, tighter margins impacting earnings.
Could be. Okay, Kumari Bank.
They took a really sharp hit, a 72.85% plunge in net profit.
Over 70% drop. Wow. Down to what?
A mere NPR 28.5 million, very low.
What happened there? Impairments?
Yes, primarily a large increase in impairment charges, also a decrease in operating profit. This resulted in a significantly negative distributable profit.
And bad loans?
High, 6.98%.
Nearly 7% bad loans, huge jump in impairments, negative distributable profit. That paints a pretty concerning picture for Kumari Bank's health right now.
It does. The numbers are quite alarming. Suggest significant asset quality problems hitting their bottom line hard, potentially impact stability too.
Himalayan Bank. Any better?
Not really. They saw a massive 74% decrease in net profit, down to just NPR 500 million.
Another huge drop, over 70% again.
Yeah, and this was despite an increase in their operating profit, which is unusual.
Operating profit up, but net profit way down. How?
It seems a significant decline in their net interest income swamped the operating profit gain.
Ah, the core lending income fell sharply.
And they also have negative distributable profit. And their non-performing loan ratio is high too, 7.68%, even higher than Kumari's.
Wow, over 7.5% NPLs. That's serious. Himalayan situation sounds critical too, with fundamental issues in lending and loan quality.
It really does. The high NPLs and the big drop in net interest income are major red flags.
Okay, Krishi Bikas Bank, Agriculture Development Bank.
They had a 10.17% dip in net profit, down to NPR 1.84 billion.
A more moderate decline. What were the drivers?
Decrease in both net interest income and operating profit, so core earnings down.
But any mitigating factors?
Interestingly, their distributable profit actually improved.
It did, despite lower net profit. How?
Maybe better management of capital reserves or retained earnings. It's a bit unusual, but a positive sign in a way. Their bad loan ratio is 4.98%.
Okay, nearly 5% bad loans. So a mixed bag for them. Lower profit overall, but maybe managing their capital better?
Seems that way. The improved distributable profit is notable, even with the profitability hit. The bad loan ratio still needs watching, though.
Right. Prime Commercial Bank.
They saw a 22.56% decrease in net profit, down to NPR $2.22 billion.
Over 20% drop. Main cause.
A significant rise in impairment charges again.
Yeah.
This happened despite growth in both their net interest and total operating income.
So income was growing, but provisions for bad loans wiped out more than those gains.
Exactly. Their operating profit also decreased. EPS fell to NPR 15.32, and their bad loan ratio is 5.65%.
Seems like loan quality issues are really dragging down their overall performance, even with some positive income trends.
Clearly, Prime's experience really highlights how critical maintaining a healthy loan portfolio is. Rising impairments can just sink the ship, even if revenue is coming in.
Okay, one last one. Citizens Bank.
They had a 20.59% reduction in net profit, down to NPR $961.8 million.
About a 20% drop. What's their story?
Interestingly, their net interest income increased.
It did, but profits still fell.
Yes, the fall was attributed to a decrease in their operating profit, and their bad loan ratio has also risen to 5.71%.
So for Citizens, they're making more from lending, but maybe operational costs are up or other income is down, and rising bad loans on top of that.
That seems to be it. Potential issues with cost management or operational efficiency hurting the bottom line despite better net interest income, plus the added concern of rising bad loans.
Okay, wow. So stepping back and looking at all of these, it's a really diverse landscape, isn't it?
Absolutely. A real mix. Some banks are clearly thriving, showing strong profit growth.
Right, like Global IME, Everest, Nabil to some extent.
But then a significant number are facing pretty serious headwinds, with profits falling, sometimes dramatically.
Like NIC Asia, Kumari, Himalayan.
And the trends within those results are varied too. Net interest income is up for some, down for others. Same with operating profit.
But the things that really jump out seem to be those impairment charges.
Definitely. They're having a huge impact on many banks' bottom lines.
And the fact that non-performing loans or bad loans seem to be creeping up for quite a few institutions.
Exactly. The rising impairments are a direct result of loans going sour. And seeing NPL ratios climb at several banks could point to a broader trend.
Maybe linked to, what, past aggressive lending, changes in interest rates making it harder for people to repay, or just tougher economic conditions overall.
Could be any or all of those things. Increased lending in prior periods might be coming home to roost now. Rate changes definitely impact borrowers. And the general economic climate plays a huge role in defaults.
And that divergence, we kept seeing operating income up, but net interest income down for some banks.
Yeah, that's fascinating. It really makes you ask, where's the growth coming from then? Is it sustainable if it's not from core lending? Is it all fees, commissions, other non-interest stuff?
It just highlights why looking only at that final net profit number, well, it doesn't give you the whole picture, does it?
Not at all. It can be quite misleading, actually. You really need to dig into the drivers. How's the core lending business doing? That's net interest income. How efficient are they? Operating profit. And crucially, how healthy are their assets, especially loans? That's where impairments and NPLs come in.
So tying this all together for our listeners, why should they care? Whether they bank with one of these institutions or maybe invest or are just interested in Nepal's economy?
Well, the banking sector is just fundamental, isn't it? It's the backbone of the financial system. Its health, stability, profitability has knock-on effects for almost everyone and everything in the economy.
Right. Access to credit, safety of deposits, investment confidence. It's all linked.
Precisely. So understanding these trends gives you a real insight into the broader economic health and potential risks or opportunities.
So ultimately, this deep dive into the third quarter reports shows a Nepali banking sector that's, well, navigating a pretty complex patch.
That sums it up well. Some are managing strongly, demonstrating resilience, but the significant number facing profit drops, and those worrying trends in bad loans for some. They raise important questions. Questions about the sector's overall resilience, maybe future consolidation, and what direction things are headed.
It leaves you thinking, doesn't it? As we look ahead, what factors are going to be the most critical for these banks? Is it going to be managing those bad loans, finding new income streams, cutting costs, adapting to interest rate changes?
All of the above, probably. It's going to be a challenging environment to navigate.
It certainly gives us, and hopefully our listeners, a lot to mull over. What questions does this spark for you? What do you think comes next?
Good questions to ponder.
Definitely. Well, thanks for joining us for this deep dive into the Nepali banking sector's Q3 results.
Pleasure talking through it.